Good evening, everybody. Still here. Daily Market Pulse. Thursday, January 23rd. 23rd, yes. 2014. So stocks are slammed today, down in higher volume, so adding distribution days across the board. We're back up to 6 on the NASDAQ, S&P respectively. We had the Dow and the S&P both closing below. Of course, the Dow was actually already closed below the 8 moving average yesterday. I improperly posted that yesterday, but nonetheless, it's definitely down today, and so is the S&P. The Nasdaq managed to hold. That's going to be the key index. That's why we're still in a confirmed uptrend and not necessarily under pressure with this 6 count. We see the Nasdaq start to fall, then we're going to start seeing this outlook shift. So Nasdaq above, the TSX remained above as well. So let's take a look at the charts at this point as well, so we can see what's going on. So there we have the drop. So we had the support area for a little while, the window. We had the pullback into the 20 with an immediate rebound, but it just cannot get through 16,500 and held there. And the moving averages were starting to converge together, the 8 and the 20, and then boom, sayonara. That little crossover was enough to drop at least the short-term trend to the downside. Of course, now it's closed below the 8 for 2 consecutive days, almost 3, but 2 for sure, into the 50-day moving average. But also, you see the gold lines horizontally, those represent former pivot area highs back over here in November, December, including to some degree part of the breakout that occurred in mid-December as well. So for now anyway, it appears support may have been found here, at least for the time being. It closed below the lower Bollinger Band, but the bands, remember, were tightening as of yesterday. Look at them opening up now. So the volatility is there. Now, it doesn't mean it's going to continue to the downside. That could also mean that it's finally just opening it up and then looking for volatility. It could just easily bounce up and go just skyrocket through 16,500 and even higher. But with distribution days counts as high as they are, it makes you wonder, especially with the activity they had at these levels. They were not able to actually burst to the upside like everyone thought they would with the start of the new year. So with that, you're at support for now into 16,100. A close below that level, which would include a close below the 50-day moving average, takes you back down toward 15,700, a good 400-point drop. So that's what I would be anticipating if that's the case. Then, of course, you see the stochastic's not oversold yet, so we'd be seeing that all coincide. So in the meantime, we wait to see what tomorrow's reaction will be. Any kind of a move to the downside, we're probably accelerating. Keep in mind, there could also be, since the trends are still up, the 50 is still rising, etc., etc., there could still be a bullish reversal of sorts, a little kind of a bounce, if you will. Back toward the breakdown level, back at 16,400 to almost 500. So we'll see how that works out. So let's go to the S&P next. So there's that resistance area across the top. You see that horizontal red line right where the bear sash high was at 1847 or so. There's a decline. You had a doji, also a doji into that resistance level. Bollinger Bands tight meant that that could be a serious selling place for it to occur. Sure enough, it did. And to a degree, for 5 days, the price action was holding above the rising window right over here that occurred on the 15th at 1841 to the highs, as I mentioned, 1847, 1848. So it was going sideways for those 5 days, holding at the 8 moving average as well on the 20. And then here's the collapse today following the doji that occurred yesterday, spinning top, etc., hanging man back a few days back. So 50-day moving average could be the next level and target. You see the gold lines again, that's 50, but also the pivot highs that occurred back in December. That's the likely target on the way down. We'll see if that's the case. Again, the long-term intermediate trends are still up. Short-term is starting to roll over. 8 moving average in this case has not crossed below, so at least the short-term trend is actually holding up reasonably well here as well. Of course, price action closing below the 8, so that already tells you you'd have to be considering closing out a position in the SPY, for instance, but not necessarily just yet. You got support immediately below, so let's see what happens. But again, with distribution day counts up to 6, I've always said it looks kind of shady. I'll show you the put-call ratio chart here in a moment as well. Let's go to the NASDAQ. So NASDAQ, as I was saying before, is going to be critical index to watch for whether or not the markets ultimately break down and collapse. So you've got the rise up, rising window, move higher, hanging man, another move higher yesterday, and then the collapse. Falling window today, see the lower shadow? It had dropped quite a bit right into the 8 moving average, very close to the target of the window below and that change of polarity, including the 20-day moving average. before a little bit of a bounce late in the day. That bounce took back about 50% essentially of the low, from the low today to yesterday's high. It took about half. So that's a 50% retracement already occurring late in the day. Will it hold and go higher, or is that going to be it? Will that be the resistance that will then break it down back towards support, the 8 moving average, back to the polarity area, the window, including the 20-day moving average? That's the million-dollar question. We'll see what the futures bring us, as well as what the open will bring us tomorrow morning here on the NASDAQ. Let's go to the TSX. Okay, so here we've got sideways. Look at the highs. 4 consecutive days going sideways at 14,000. We said 14,000 was going to be the goal. 14,000 was going to be the psychological level it was going to reach for, and it did so. So a little bit higher would have been the 1618, but I think we're close enough. But 14,000, you can see, pretty obvious. This high, 13,888. This, oops, I'm sorry, 13,990, 13,999.6. 13,999.58 and 14,002 today, and then fell with a bearish engulfing bear sash combination. So with this resistance at 14,000, if a sell signal, I'm looking for more downside. It makes sense. Retracement wise, it's due. 8 moving average would be a minimum, otherwise some kind of percentage. It may even drop down back to the original breakout area near 13,760. In that vicinity as well. I can always do a quick retracement for you as well. There's the high, there's the low. So 13.8 all the way down to maybe 13.740 as mentioned. That's the 50% retracement. That could make sense. So sell signal with at least some kind of retracement expected. Minimum would be about 13.9, where the 8 moving average will be tomorrow, and possibly lower as mentioned. So that's what we're looking at there. Otherwise, the long term, if I go back to a weekly here, let's see here. Yeah, the weekly was already broken, I guess, right? So the weekly was broken, so it just gets a little skewed on the daily, looking like there's an actual resistance up there, but that's not actually where the case is at all. So that's the TSX for now. All trends back to the upside. Let's go move on. We have the US dollar, Canadian dollar. You see the huge thrust and surge to the upside, up, sideways consolidation at 110, and then boom, boom. So shooting star today. Now it's definitely overextended. Chances are here now you're going to start seeing a decline. You're going to start seeing the Canadian dollar get a little stronger, but at 110 to 111, we're going to start seeing a shift, most likely back to the downside, some retracement back toward the 8 moving average near 110. It would be my thought. Decent bullish activity here still, closed higher, but with a shooting star. Nothing confirming these levels either, so no real definitive direction, to the downside for sure. Certainly could still go higher, but it just looks kind of on the extended side. There's still room on the stochastics, like you can see, so just pay attention. If it's going to pull back, I'm looking at 110. Otherwise, it could still go higher. Let's look at the treasuries, because treasuries were strong. Treasuries had burst up, closed multiple days above the 50. Remember, it pulled back to the 130 area, which I thought was going to be a target, plus the 50, plus the crossover area of where the 8 crossed over the 50. And then boom, and then a little sideways, and then there was a little bit of resistance at 131. We knew that was a target as well. Next targets after that would be 132, 133. Well, that's essentially what they've done. They went to 132 today, and there's still room higher, ultimately to 134, which would be this pivot area all the way at the top right there, 134 and some change. I can drop that down maybe a little bit, but that's about what I'm talking about. Yeah, right about there, 134 and so on. So that's what I'm looking for. The ultimate target is to go through, but right now, see the 20 is rising, and the 50 is just beginning to rise, and we're going to see a possible crossover, a golden cross. That'll only strengthen its current trend as this thing may be forming. Right now, forming a V shape, but a bigger, much bigger, almost big W-like pattern that you can see here. So it's down, up, down, and then where does it go from here? W, double bottom as well, right? So big formation with a neckline across here. As I said, 134-ish will be the neckline. So that's going to tap into there. Probably that's where it pauses. That's usually the case. The big move, of course, will be above 134 through the neckline. If you can ever accomplish that, you'll be looking at about a $6 move to the upside on a longer-term basis as a measured move for treasuries. Now, the yen was another big mover today as well. So it came down. It got very quiet. Multiple doji moving averages were converging. And it just seemed like support was right there across, and then boom today, right back into the other area where the neckline was, or at least where the former support then became resistance area Still hasn't gotten up through there, nor has it gotten up through the 50-day moving average, but obviously things are looking brighter for the yen to possibly break out through 97 into 97.50, and then looking for targets of 98, 99, and possibly higher. So the yen looking pretty strong on the long side right now, but it needs a little bit more price action, a little bit more confirmation perhaps through this area to go higher. Gold was also very active today. Gold still had that kind of look that it could actually do something with the 50 and the 8 moving average converging, the 20 converging as well, and everything from the lows still looked pretty decent. It was going to run into some trouble going to 1250 to 1265. That was the case. Dark cloud cover a couple days ago. It rebounded beautifully today off a rising 20, and still looking for more. It still needs to get through this area, 1265. Then it's got 1280. And then into the 1320 region as the next target, as high as maybe 1350 to 1360. So gold looking very good, very strong. Silver will be the same as well. Let's take a look at crude. So crude came off the lows. You remember the bullish piercing way down there at 91. Skyrocket a couple days and went sideways off the 8 moving average through the 20, through the 50. Now this is interesting because we have an 8 that's rising. We have a 50 that's actually starting to turn up a little bit at this point, but we have the 20 that actually crossed below. So it was a dead cross, but they're all converged together. And this is likely to continue higher into 99, would be my opinion. With maybe a pullback first. Possible to pull back first, but it's going to get into 99 to 101 potentially. But with these moving averages converging, price action above, if it pulls back into 95, 96s. Just as to test those moving averages, and then from there the strength of those crossovers, 8 over the 20, 20 possibly coming back over the 50, the 50 starting to rise. This could get very strong, straight into 1 to 101, and then that's when maybe everything gets much stronger. Remember, we got into 101, and we were looking for the possibility of 103, but at that time, think about it, we're at 101. If I go back this way, when it got up here to 101, what were the moving averages doing? 50 was still declining. Yes, the 20 was crossing up, but the 50 was still declining. So no real strength in the intermediate. Now, it's not even quite at 101 yet, of course, not even at 99, and the 50 is already flattening and rising. 20 will be easier to turn back up. The 8 moving average is aggressively already turning up as well. So the fact that price action is above everything, and they're all starting to turn to the upside, as soon as they cross over and stack accordingly, 8, 20, 50 in that order, from top to bottom, this can only get stronger, and looking for that neckline above 101 to really, for the possibility for it to bust loose to the upside. So we'll see how that goes. Let's look at some other stuff here. Natural gas still looking very strong. 3 solid days to the upside here. Pushed through 430, 450, 460, hit a high today, almost $5. So now with this having closed 2 consecutive days outside the Bollinger Band with those bands widening, you're probably looking for a pullback at some point of maybe a retest of 450 to 460. And that's what I'd be looking for. Otherwise, of course, it's still ultimately going to go higher, so it appears this whole thing looks like it's going higher. But you can see the target area was actually met already right there. So it went at and through, but closed below. So that's what we're looking at here on natural gas. Small caps should be worth looking at. We talked about this. In fact, the breakout above the polarity area, 116, and went into 117, a new high yesterday. Bollinger Bands are starting to open, so it looked very aggressive, looked very bullish. But again, just like the NASDAQ, it pulled back today into the polarity area, into the 8 moving average, and held. So slight pullback for the most part. For most of the day, this was looking kind of ugly, but it never did close below the 8 nor below the polarity of 116. And still has a little bit of room to the downside near 115 to 115 and a quarter, where the 20-day moving average resides, including windows as well, and a previous sort of area of former resistance, which will be a polarity area there as well. So trends are still very much to the upside. All the highs are still going higher, lows are still going higher. So for now, until we start seeing this crack, the NASDAQ crack more, then we're truly not going into correction. So we'll see how this goes. Okay, let's take a look at some other ones. So interestingly, where we had selling everywhere else, transports did not. Transports ended up actually breaking up higher, got above the bear sash, above the other high, above the spinning top high yesterday, including today with a new high today into 136. So interesting. Gap lower on the open, which was perfect for a reset, and then went higher from there. If I take you to a 30-minute chart just for the sake of fun, there's what it looked like. Went higher, gap lower today, went up, came down, and would finish back up once again. So it's attempting and trying, but there's some resistance near 135.50, ideally to 136 still remains here, but we'll see what it does. Obviously the strength remains in the transports for now. And lastly, let's take a look at the VIX. The VIX was sideways, finding support off the 1250 area that coincided with the hammer that occurred back on the 26th of December. You remember that there was a push off of the hammer, there was a short squeeze into the moving averages, as well as the 14.50, $15 area came all the way back to retest bull sash. A couple other kind of spinning top formations, small, almost hammer-like formation here as well. So that support was solid. It held, bounced around a little bit, got a little jittery the last couple of days leading up to today, where the bulls were stepping in. Gaps higher, moves higher, but not quite accomplishing anything, slamming into some of the moving averages. But today, a huge gap up, just like we saw the markets gap down. This gapped way up into 1375, hit a high today of 1466, so right into the 200-day moving average. Bollinger Band starting to open. Resistance area is 1475 to 15. That's the same area we've been visiting before. Shooting star, yes, but immediate window and looking very, very bullish still, regardless of the fact that there's a shooting star. Keep a close eye on this as long as it stays above the 50. With the 8 moving average beginning to rise, this could start getting real accelerated to 15, 16. In my original anticipation a while back was as the VIX was rising in December into 16, I thought the targets were more like 18 to 19 based on former window. In fact, let me put that in there right now. Right in here is the window. And I'm going to change that color. Well, that's interesting. And that is already, I guess I picked the wrong one. There we go. That's better. My eyes were deceiving me there for a minute. And I'm going to shade that a little lighter. And I will get rid of this area, I think. This one right here. We'll leave that one there, and that's fine for now. We'll leave it like that. So that's what I'm looking at. So now it may be the time when it actually starts to surge through 16 and gets into 18, 19, potentially, and maybe higher. So we'll see. Again, we just saw a bunch of support levels in the NASDAQ. Same thing with transports, etc., etc. But we're also seeing some weakness and breakdowns in other places, but there's still support present. So we'll see how they behave tomorrow going into Friday and how the weekend may influence this at all. Okay, so I did promise one more thing, didn't I? So I mentioned the put-call ratio. So what you see here, it's split in three. The upper third is the put-call ratio. The blue line happens to represent a 5 exponential moving average of the put-call ratio. What you see there in red and green are simply markers, 0.7 versus 1. Anytime it gets over 1, you're usually thinking that the selling is way overdone and there's likely to be a bounce coming soon, especially when it coincides with the VIX closing aggressively above its upper Bollinger Band. So you can see on the far left, the green shaded area I've got, the put-call ratio is way high. We saw the VIX skyrocketing through the upper Bollinger Band, and we happen to see a reversal candle simultaneously on the SPY. So that reversed the markets at that point. Now, when it's a lot more accurate and a lot more useful and functional when it gets over 1. When it gets into the 80, 0.7, 0.75 area, the tops don't work near as well as the bottoms. The bottoms work real well. The tops don't work near as effectively. But we did know that the put-call ratio got very, very low, very deep, the lowest I've seen in quite some time, 0.63. But now we're seeing a divergence. We're seeing the fact that this was rising this way, and prices were going kind of rolling over, at least flat, and the VIX was actually just kind of near its all-time lows, if you will, and getting a little jittery. So we're starting to see a little selling. We're starting to see the put-call ratio start to climb and rise. It's done it before, as we've seen before. It can actually rise, and it did so back over here into 0.87 or so, almost 0.9, where price action was going up a little bit and then sideways eventually, and continued higher from there even. So there's no guarantee that this will go up as the markets are going to collapse, but certainly it seems like we're a little due. We're due for a kind of a correction at some point, so we'll see if this is the time for it or not. If you're a believer of trend lines, then if we went from peak to peak to peak, that kind of thing, we can see there's already a breakout of the put-call ratio at this point. We don't know if that's going to be conclusive or not. We'll see. Put-call ratio is starting to rise, meaning selling may be accelerated. The VIX will, of course, be accelerated as well with increased volatility. We will see how that goes. So with that, I will leave you, and we'll be back tomorrow to finish off the week.